Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph Show as we continue our franchising success series. If you've tuned in lately, you know we're talking about, what makes a successful franchise. And more specifically, we've been talking about the franchise disclosure document. And this is the third part of that, and we hope to wrap that up today. But I've spent a lot of time talking about this because this really is the, quote, Bible of the franchise, and you need to spend time and put your due diligence into understanding this. This is not going to be a decision you're going to make overnight. So make sure you take the investment. Listen to my series, listen to other series that people have, do a lot of research into the things. Now, as part of that franchisor disclosure document we talked about, you get that in part 20. One of the things that the franchisor has to mention is franchisee associations. Associations of a franchisor's franchises are an important source of information. They really are. Franchisors are required to list in the FDD the associations they sponsor or endorse and independent associations that ask to be listed. An association, whether it's sponsored, endorsed, or independent, can provide information about the relationship between the franchisor and its franchisee. I would highly recommend that you ask to speak to members of the franchisee association. And what are the questions you want to ask them? Question number one is the kind of system problems or issues they discover. What does this franchisee organization do? How do they help you? What are they doing to be successful? What is it, or is it just a place to lodge grievances against the franchisor? Question number two is the system problems they have successfully resolved. What are the things that the franchisee association may be able to do is to work out resolutions to some things. Let's say, for example, the franchisor, had a national contract for purchasing and all of the franchisees were just not happy with, the products or the services that were being offered. Well, maybe the trade association, this franchisee association, was able to work out, some sort of arrangement to help resolve that. Now, also, the things you want to ask are any problems franchisees face in the operation of their outlets. Understand what those things are. What are the things that they're not telling you in the franchise disclosure? That, what are the things they're not telling you about, what's going on with the particular product or service that you're looking to get into. You also want to look at, any problems franchisees have had with the franchisor. Ask simple questions, like, what has been the biggest struggle? What do they support you the best in? What do they support you the least in? Don't be embarrassed to ask tough questions. If you can't ask the tough questions now, you're not going to be successful in building this franchise agreement and making this work. Now, the last sections of the FDD get into, financial statements. And this is where you definitely want to get involved in hiring an accountant. Item 21 provides the franchisor's three most recent audited annual financial statements. If you know how to read financial statements, this information will give you a good understanding of the franchisor's financial health. If you don't, again, it's a good idea to hire an accountant to review the statements and explain them to you. You need to ask some questions. An accountant can help you understand whether the franchisor has steady growth, whether they have a growth plan, whether they makes more income from royalty payments from successful existing franchises or from the sale of franchise in general. So that's a good point to that question. Is the franchisor making their money from royalty payments from successful franchisors or franchisees, or are they making their money from franchisees buying new franchises? And, how much of their money are they devoting to support the franchise system? Part of this financial disclosure, you may want to know how much money you can make if you invest in a particular franchise. A franchisor isn't required to disclose information about potential income or sales. If it does, the law requires it to have a reasonable basis for the claim when it's made and to include that claim in Item 19 of the FDD. If a franchisor makes a claim that has a reasonable basis, the financial disclosure document must also disclose the source and limitations of data that support the claim and any important assumptions on which the claim is based. This is something a good accountant is going to be able to drill down on. You have to ask yourself a really tough question. Is the earnings claim typical for a franchise in this system? Here's a great example. Suppose a franchisor claims that franchisees in its system earned $50,000 last year. The claim may be deceptive. It doesn't represent the typical earnings of franchisees. The FDD should tell you how many franchisees the franchisor has, how many it's surveyed to get that figure, and the number percentage of franchisees who reported earnings of that level claim. Ask the questions. Are these people successful? You're going to know that by talking to the individual franchisees. You need to ask the question, is it an average figure? How did they derive at that? Or are they really using gross sales? And see, gross sales can be deceiving. I talked about this a little bit earlier, depending upon the market that you're in. Gross sales in New York City might be dramatically different than gross sales in Peoria, Illinois. I'm not picking on Peoria. Just happened to have a client that moved out there a few years ago, and I always thought Peoria sounded like a cool name. And we still stay in touch, but I just use that as an example. But I would assume that Peoria, Illinois cost of living is quite a bit less than that in New York City. So if you're making a lot of money in gross sales in New York City, that might not be reflective of net bottom line income. So that's one of the things you want to talk about. Net profits. Franchisors often don't have data about their franchisees' net profits. They don't understand it from that perspective. They know what they're getting in royalties based on gross sales. If you get profit information, ask if it's based on information from company-owned outlets. Big exclamation point here. If they're giving you company-owned outlet information, this is your door into finding out, how come they're competing against their franchisees? And are they going to have better economies of scale? Fancy term for, are they going to get better buying than others? This is a big pitfall too when you talk about company stores. You also need to look at the geographic relevance. Earnings are going to vary with geography. If a franchisor provides franchise sales or income figures, ask if any of the supporting data came from the franchisees in your area. They need to state where these earnings come from. You also need to understand those franchisees' backgrounds. Do you understand, do they know the market better than you? Are they skilled? Are they, investors that, all of that sort of thing. You need to understand their backgrounds, and you need to also, franchisors may ask you to sign a statement, sometimes presented as a written interview or questionnaire that asks whether you received any earnings or potential performance representations during the course of buying a franchise. If they told or gave you any information about how much your franchise may earn, report it fully on the questionnaire or other statement. If you don't, you may be waiving any right to contest the earnings representations that were made to you and that you used to make your decision to buy. So pay attention to this. Again, this is something that you want to have reviewed with your attorney. Definitely. In the next session, we're going to talk about signing the franchise agreement. So don't forget to tune in with the next one. If you missed any of these, you can go back to our podcast site, and that way you can make franchising a success.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.